Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of March 2nd, 2026. Let's get started. SEAF signals for this week. Utilities jumps into the top spot. We retain industrials and materials, and energy gets bumped out of the top three to be fourth on the week. This is after a little bit of a drop off on the trading week with 9 overall. You may say, hey, what's going on here? They're both 11. For anybody that's new, the rule set here is we take, when you have an overall ranking score that is the same, the ranking gets defaulted then by the trading week, so the new money that comes in. So in this case, because energy had the worst trading week, it gets bumped out of the top three, overall score of 11. Just to kind of keynote here, these are a little bit higher on the score ends here. We're not seeing that true leadership like we did with energy a couple of weeks ago, where it was sitting with ones across the board with an overall score of 3. This is a little bit of a, like I said, higher scores. And then here, financials kind of here sitting at the bottom. Technology coming out, still pretty low, but showing a 6 on the week. I'll tell you why that's a little less important this week than other weeks. And again, seeing consumer discretionary here too on the trading week. When we hit in the heat map, I'll give a little bit more context for what's going on. But yeah, these are our signals. Again, retaining industrials and materials and picking up utilities. Taking a look at our heat map. So key thing to note here is while utilities is 1 on the trading week, it's 0.09% inflow. With that also being said, the 10th on the consumer staples at number 10 is negative 0.05. So this is a really small, tight range, not a lot of inflows. We did have a little bit of a stronger outflow from financials at negative 0.31, but nothing really happening here in terms of the flows on 1 through 10. Very tight, nothing over 0.1%. Not seeing any real strength in any one particular sector. On the week, the entire week, for all 11 sector spiders, 0.025% increase in total assets, which is nothing. 3 of the 5 days were down days, but pretty much offsetting. I don't have any hard data for this, but with us starting a war with Iran, potentially investors kind of sitting on their hands for the week, not wanting to get out ahead of their skis prior to what was potentially going to happen over the weekend. So again, that's speculation on my part, but we don't often see asset flows this light on a particular week, and it tends to have to do with some geopolitical news. Geopolitics is not in this model. So in this model, we are truly just tracking the asset flows through 3 time periods. So there are times where we can see some things and kind of read into the data a little bit, and this one screams to me that asset managers were a little bit nervous heading into the week with geopolitical tensions rising. So again, just speculation, but wanted to make a note of what we're seeing here in terms of the numbers. Just kind of re-highlighting here what we're seeing: tactical month, strategic quarter, a lot of accumulation of assets flowing out of technology and financials. Seeing some nice accumulation also still in energy, seeing some nice accumulation in industrials, and a little bit of accumulation in both materials and utilities. So overall, the alignment here is still nice and strong in terms of where that money is flowing, even with an off week with really low flows. Wanted to highlight my sector spider total AUM, just as a reiteration. This, if you were to add up the assets under management for the 11 sector spiders and make it into one number, that's what we have here. As you can see here, not much of a movement. This is this last week, so really not much of a movement overall in terms of the asset flows for that last week. We are still above that 21-day moving average. What does that mean? Is even with a couple of down days in the market, assets really haven't been exiting the sector spiders, seemingly still holding on. We're not seeing the big pullouts that we see when we start to see some down days. So in terms of what does that mean for the broader market, Again, in general, when this chart shows above the 21-day moving average, it means we have potential for moving up higher. And we don't see any major significant drops when we're above that 21-day moving average. We've had these little couple of down days here, a couple of down days there, but nothing sustained like we saw from October to November, where we had, some kind of significant asset flow leaving the S&P 500. Again, this is one indicator. This isn't the prediction market. The market could be down a lot today or tomorrow, and assets could rush out of here. But as of right now, what we're looking at is assets are still maintaining that upward positive slope that we've been seeing since April of 2025. Obviously with little blips here and there, but no real flight of assets yet. Market's down 30 as of taping, so not a big down day today either, but just something that we like to look at. This has been a pretty good indicator for us in general for this broader market, and it also does make some confirmation on what we're doing for the sector space. If, as long as these AUMs continue to generally align with the S&P 500, we know we're knocking on the right door in terms of tracking those asset flows for the 11 sector spiders. Heading into our rainbow charts, wanted to just highlight financials was worst on the week, continues that downtrend overall. A little bit of spike up in relative outperformance, but I think that's more due to the broader market than any kind of strength in financials itself. But again, still downward trend, still down in that deep void. It was the only sector this week to have any kind of legitimate movement in terms of its AUM numbers. Energy, energy, nice uptrend for energy, seemingly stalled out a little bit as we're turning sideways. We could see that's happened here in terms of its reduction into mid-favored. We'll have to track the energy market nice and tightly as, geopolitical factors take note. But in general, it was nice. We did pick up a bunch of relative outperformance, kind of ringing the cash register in terms of the model. And if assets start flowing back into energy next week, because of that strong accumulation that we are seeing in the tactical month in the strategic quarter, we could see energy jump right back up into that top. So we're going to keep an eye here. Like I said, you can see here on the relative outperformance chart on the bottom here, we've gone a little bit sideways with energy. Wasn't getting that real strong upward trend like we had been seeing for for January and February. So we are taking a little bit of breather, taking some of our profits, but that's the great thing about the SEAF model is we're just tracking the asset flows. So if assets start aggressively flowing back into energy, we could be right back in this next week. If this trend continues and we're down into neutral, then we got out at the right time and we sold near the top. So overall, pretty good trade here for energy. Utilities is new this week. Utilities been playing around in favored. This aggressive move from avoid neutral into favored produced some nice relative outperformance, a little bit of a retest and then back up into favored. So again, but assets flowing into utilities, this is with a grain of salt. It was a light week, so a lot of utilities being driven up into that top spot had to do with the fact that we had light flows, and it was the most of the light flows. That's just kind of how the model works. We do have some accumulation in the tactical month, and then a little less so in the strategic quarter. Overall, a nice place to be in terms of relative performance. A little seemingly coming off the bottom here, so we're trending in the right direction. And continued strong flows could see this thing in the upper favored, where we can really maybe take advantage and take off more of this relative performance from SPY. Last but definitely not least is industrials. Industrials continues to have a strong, really strong, almost quarter and a half now. We started to outperform here in late November, early December. Spent a lot of time here. A little brief interlude into neutral as we were testing this relative performance resistance line, broke through that and kind of off to the races here. Still a SEAF signal, still strong similar to energy, a little bit sideways here, but sitting in that nice middle favorite here. Really strong uptrend in the relative performance versus SPY. Industrials continues to be a good place to be. And like I mentioned, aside from energy, really strong accumulation in the tactical month and strategic quarter. So even with the lighter flows, we stay in that 2 position, and this thing could be back up to being 2s across the board next week. With a little bit of stronger flows as the market digests all the geopolitical information. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.